Grayscale Bitcoin Trust and its ties to crypto meltdowns. The Grayscale Bitcoin Trust is an over-the-counter traded fund meant to track the price of Bitcoin. Grayscale Investments is owned by Barry Silbert's crypto mammoth digital currency group, which also owns beleaguered crypto trading and lending firm Genesis. Here's how it works. When Grayscale chooses to open its private placements, accredited investors are able to deposit Bitcoin to receive shares of the trust, or deposit cash and have Grayscale help facilitate the purchase of Bitcoin. Purchasers in the private placement are unable to sell their shares for 6 months due to the specific regulations governing Grayscale Bitcoin Trust. After that, they're able to sell the shares to other people. Once those shares are available for sale, people are able to purchase them from their broker and thus gain indirect exposure to Bitcoin. Grayscale charges 2% of assets under management as fees for Grayscale Bitcoin Trust. How is Grayscale Bitcoin Trust different from an exchange-traded fund? An exchange-traded fund is able to issue and redeem shares for the underlying index. So an investor who approaches a spot Bitcoin exchange-traded fund with Bitcoin can convert their Bitcoin into shares of the exchange-traded fund. And investors with shares of the exchange-traded fund can convert them into Bitcoin. Exchange-traded funds are also traded on national securities exchanges, whereas Grayscale Bitcoin Trust is traded over the counter. This redeemability would help eliminate the tendency of Grayscale Bitcoin Trust to trade at either a premium or a discount to net asset value. Grayscale is famously in the midst of suing the Securities and Exchange Commission for denying its request to convert the trust into an exchange-traded fund. Grayscale Bitcoin Trust has not offered redemption since 2014. It settled with the Securities Exchange Commission, along with sister company Second Market, in 2016, for alleged violations of Rules 101 and 102 of Regulation M. Since then, Grayscale has not offered redemptions. Regulation M prevents Grayscale from offering redemptions within the 6-month restricted period after an issuance. However, Regulation M does seem to permit Grayscale to offer redemptions outside of that restricted period. In this instance, it can only redeem and not issue simultaneously. David Henns, partner at law firm Ropes & Gray, explained in his public comments to the Securities Exchange Commission that, quote, Regulation M, however, does not prohibit Grayscale Bitcoin Trust from redeeming shares as long as Grayscale Bitcoin Trust is not concurrently distributing shares, end quote. Since 2014, investors have been able to contribute to the fund, helping it grow, but no one has been able to redeem. If Grayscale were to open redemptions, that would be reversed. Shareholders will be able to redeem, but no new investors will be able to issue shares. Opening redemptions would reduce the amounts that Grayscale would earn in fees by reducing the total assets under management. How did it help destroy 3 Arrows Capital? For a long time, Grayscale Bitcoin Trust traded at a significant premium to its net asset value, with shares trading for as much as double the value for the corresponding Bitcoin. While this premium persisted, institutional investors were incentivized to lock up Bitcoins and receive Grayscale Bitcoin Trust shares, which they hoped to sell once the 6-month period elapsed. However, this trade became popular among a variety of firms, including BlockFi and 3 Arrows Capital. As shares began to unlock, Grayscale Bitcoin Trust eventually started trading at a discount to net asset value. This became particularly challenging for BlockFi, which had lent 3 Arrows Capital money against Grayscale Bitcoin Trust collateral. Eventually, 3 Arrows Capital was liquidated by BlockFi, which meant increased selling of Grayscale Bitcoin Trust into the market, further raising the discount. Currently, Grayscale Bitcoin Trust trades at around a 45% discount to net asset value. Where are the Bitcoins? Coinbase custody. The custodian agreement written into the prospectus for Grayscale Bitcoin Trust prevents Coinbase custody from disclosing those addresses, even to Grayscale or Digital Currency Group. It reads, quote, Under the custodian agreement, the custodian must use its best efforts to keep private and public keys secure, and may not disclose such keys to the sponsor, trust, or any other individual or entity, end quote. There's no way to verify the ownership of Bitcoin by Grayscale Bitcoin Trust on-chain. Will Genesis affect it? Digital Currency Group, the parent company for both beleaguered Genesis Trading and Grayscale, is reportedly fundraising to help shore up the books of Genesis. If Grayscale Investments withdraws as sponsor for Grayscale Bitcoin Trust, then the remaining shareholders have 90 days to find a new sponsor or the trust will terminate. If the trust is forced to liquidate, the Bitcoin will be sold as, quote, promptly as possible while obtaining the best fair value possible, end quote. Cash proceeds will be distributed pro rata to shareholders. Grayscale Bitcoin Trust currently has 644,000 Bitcoin. Those who purchased at a significant discount could potentially make money, but that depends on how the sale of Bitcoins would affect the market price for Bitcoin. Grayscale is one of the most profitable parts of the Digital Currency Group empire, and it likely would try to avoid liquidation, as it generates approximately $200 million in fees. The shares do also allow for distribution of the Bitcoins to shareholders, instead of cash proceeds. However, that seems to require a voluntary termination and 75% of shareholders voting in favour. If Grayscale decides to open redemptions, Digital Currency Group would be able to redeem the hundreds of millions of dollars worth of Grayscale Bitcoin Trust it purchased at a discount. For more informed news, follow us on Twitter and Google News, or listen to our investigative podcast, Innovated Blockchain City.